Hey, what's going on, guys? Benny Giles, founder of the Teach Me the Fish Effects Trading Community, back with another inspirational video. Hey, guys, in this video, I want to talk to you guys about the part of ICT silver bullet strategy that everyone has missed. And that's the reason why a lot of us have not found success with the silver bullet strategy, right? I'm going to show you guys this really quick, okay? So let's take yesterday for example. All right. Um, these gray vertical lines here, they're marking out 2 to 3 p.m. New York Eastern Standard Time, right? Which is the afternoon time period, which is the afternoon time period for the silver bullet strategy, all right? Everyone is looking for or waiting for an FVG to be formed within that time period to take the trade. All right. So let's take a look here for prime example. I'm going to use here. I'll use this. So if we wait for the FVG to be formed within the time period, all right, like this here, this is how I usually draw my FVGs, right? If we wait in that time period for it to form, we're not going to find success, right? This FVG formed within the afternoon time period, right? If you come over here and we had this 5-minute candle to form right here, right? But it is unsuccessful, right? However, if we look for, like ICT teaches, for within the time period for price to trade, not form, but trade within a FVG, right? Then we'll find success. Meaning, if we come and look over here, there was already an FVG formed, right? That price traded into and respected it, right? It traded into it and it respected the FVG that was already formed before 2 p.m., right? That trade worked out. So that's the key that everyone is missing. ICT did not say to wait for an FVG to form, but he said to watch for price to trade within an FVG between the time periods, which are 3 a.m. to 4 a.m. Eastern Standard Time, 10 a.m. to 11 a.m. Eastern Standard Time, and 2 a.m. and 2 p.m. to 3 p.m. Eastern Standard Time. We're looking for price to trade within an FVG, right? To take our trade. We're not looking and waiting for one to form because there may have already been one formed. We're waiting for price to trade within an FVG, right? So this was a prime example for yesterday. You're waiting for a price to trade within a FVG, and then you take that trade. You're not waiting for it to form to take the trade, right? Again, I know I'm sounding like a dead horse, but I just want you guys to get that. Try that and see if you find better success with ICT's silver bullet strategy. All right. Let's see if this gives us the same thing. So here's 10 a.m. to 11 a.m., right? 10 a.m. to 11 a.m., right? So now we're looking for price to trade within an FVG, right? So we come here, price trades within this FVG here, right? So what I would do, since I will have two back to back here, I would take my trade here. All right. So as soon as price taps into this FVG, right, I would trade there. And where does my stop loss go? Right. I'm looking at that as one big FVG because I have two back to back. I'm looking at that as one big FVG, right? So it's going to go, my stop loss is going to go 2 pips above the previous swing of the FVG, right? That I'm jumping in, right? Back to back for me. Again, I'm taking both of those. So, excuse me. Let's do this. I'm at 16.5. All right. That would be my stop. Okay. And looking for some of you guys could do like a 2-to-1, but what I would want to do is, what was that? 8.5, 10.5. I did that wrong. I always do that wrong. Yeah, still a 1-to-1, but we can see that when we do that way, even when we come into, take a look to the left, right? Take some time, but that trade, that 10 pip, right? Trade gets hit right here, right? So that works. Okay, if we take a look over here, all right, again, here is the 3 to 4 a.m. Okay, we're not waiting for one to form, right? You see here again in this example, if we wait for one to form, right, you're not taking a trade here. But if you're waiting for price to trade within an FVG, for instance, here, one has already been formed. As soon as price, let me do this to make sure you guys can see this. I'll draw this out. Here is an FVG, right? Price between 3 to 4 a.m. New York Standard Time, excuse me, Eastern Standard Time, all right? Price trades within, right here, directly at 3 a.m. Price trades within, right? And it actually respects this FVG. But again, for me, because it has so many right here, right? My stop loss will cover all of these FVGs here. All right, so let's go to the shorts. All right, here's the FVG. That price trades within. Okay, and it's gonna go above that stop. Let's just say maybe we do. It's just because I have the excuse me. It's because I have the magnet on. I'm just gonna disable the magnet right now. Let's just say we do a 2-to-1, something like that. All right. It's successful. But again, if we're looking for and waiting for that FVG to form within that time period, it doesn't work out. And again, that's not what ICT said. ICT said between the time periods, so it sounds like a broken record. I'm beating the dead horse here, but I want you guys to get this, right? This is why I am more successful at doing this. Now there's some other factors, like I took an FVG, excuse me, a silver bullet setup yesterday that I should not have taken. I had higher time frame liquidity resting below, and I was taking a buy setup. So stupid, so stupid. But again, I am since because of that one time, like I am not 9 out of 10 times successful at taking these. Like, so 99% of the time I successfully take these because why? I'm not waiting for an FVG to form within the time period, right? I'm waiting for price to trade within an FVG that could have been formed prior to the time period, right? Because that's what ICT said, right? And I'm taking that trade, right? I am taking that trade, okay? And typically, what I do, guys, just to show you again, I do projections, all right? So I look for like the manipulation, okay? So let me just close that out. So I look for the manipulation, basically where price, in this case, price would have swung up, but then came down. So I'm going to set my projection starting, let me turn the magnet back on because it just helps. All right. So I take my fib tool. All right. If the manipulation was up, right, and then the distribution was down, all right, I'm going to take my Fibonacci, draw it from the top swing to the bottom swing point. Okay. And I'm going to change to my projections 2.0. All right. And then from there, what I do is, once price reaches one standard deviation, I take 50% profit, and I take 50% of my risk off, meaning I subtract 50% of my stop loss. And let me do it this way, just to give you guys a visual. Okay, I'm going to take a short position tool. All right, again, we enter in, let's make this part large. We enter in, here, let's do it like this. Enter in on that FVG, right? Where there's my stop loss go, I'm going to cover these FVGs. So it's going to go about 2 pips. Let's do it like this. Looking for my stop. It's going to go about 2 pips above that swing point. So 65. Okay. And again, once I get to here, all right, I'm taking 50% profit, right? And I'm taking off 50% of my stop. So that'll go from 65 to 35 ticks, right? That looks like that. And then once I get to 1.5 standard deviations, I put my stop loss 1 pip, right, into profit, right? And I let the rest run, right? And I typically try to let it run to 4 standard deviations, right? Minimum 4 standard deviations. Okay. So that's pretty much how I do all of my trades now. And I have been profitable, right? Profitable. Let's say if it moves to uh, 1 standard deviation, right? Again, I take 50% profit, 50% risk off. If price does come back against me, I've just made about 25% of, sorry, I just made about 25% of what I've went into the trade with, right? Which is half of 1% of my account. That's how I do mine, right? I don't risk 1% or anything like that. It's just my lot size is always half of 1% of my trading account. But guys, that is the part of the silver bullet that everyone has missed. You're not waiting for an FVG to form. You're waiting for price to trade within the FVG, right? Within the time period, right? So guys, try that out. See if that helps you guys with your win percentage with the silver bullet strategy. All right. Share this video, guys. Make sure it goes viral. Make sure it goes viral, because a lot of people, they're doing these videos. They're doing awesome jobs explaining it, but they're leaving out that key point. So that makes it erroneous, right? That's not the full, it's not being taught the way ICT himself teaches it. And that's a big thing with me. So, all right, guys, I hope this helped. Try it out. Subscribe to the channel if you have not yet subscribed. Like the video. Comment below. Let's have a conversation, guys, and let's get the correct information out there. All right, guys. I'm gonna go ahead and upload this video and watch and see how many people start making the correct videos after this one is posted. I guarantee you, right? I guarantee you, when you start date stamping, this is going to be the first video outside of ICT himself that is correctly teaching the silver bullet strategy. What is the silver bullet strategy? Again, between 3 to 4 a.m. New York Eastern Standard Time, 10 a.m. to 11 a.m. Eastern Standard Time, and 2 p.m. to 3 p.m. Eastern Standard Time. You're waiting for price to trade into an FVG, right? And that FVG could have formed before these 3 time periods, and we're taking the trade from there within the 3 time periods. We're not waiting for the FVG to form. And guys, do this on the 5-minute. Okay, do it on the 5-minute. Works a whole lot better for you. All right, guys, I'm out. I hope this helped. Again, subscribe, like, comment, and let's get a little bit more successful with our silver bullet trades. All right, guys, have a good one. Bye.